Hello, everybody. Welcome back to Earnings Call. My name is Jeffrey Beamer, and I am the Senior Investment Strategist over at ewotrader.com. And if you've seen our show, you know we talk about earnings on stocks, and we don't really talk about the projected earnings per share or revenues. We talk about how to profit from company earnings announcements, okay? So this week, the week of July 20th, marks the first full week of second quarter earnings. And the earning floodgates are officially opening. We have over 437 companies announcing earnings this week. And they're some of the biggest names in the marketplace stepping up to the plate with big tech, industrials, financials, transportation, all taking center stage. So several market leaders are going to report, making this one of the first major tests of corporate earnings momentum. Okay, so we're going to go through the list. We're going to take a look at a couple of trades that we closed out over last week. And then I have a new trade update for you, all coming up right now. Now, out of that 437 stocks, we're watching about 26 companies. And of that 26, I've narrowed them down to this list. These are some of the best candidates for trades. It's not necessarily all inclusive because it's trading, and options on stocks are constantly moving, and implied volatility is constantly being adjusted, and things can change daily. But as of today, this is the list where I'm really keen on some of these trade opportunities. So I'm going to talk about them. There's a few names on here that are not on our list that I am going to talk about. So you'll want to stick around for those. But we have this list broken off into two parts. Okay. On the left-hand side, these are what we call breakout stocks. These are companies that on average, their move after the earnings announcements are double digits. For these companies, we like to trade straddles and strangles. Okay. That is the option strategies that we like to trade, either a straddle or a strangle. Those two strategies are very closely related. All right. Now, on the right-hand side of the deck, we have what we call quiet stocks. We have a big quiet stock list this week. Okay. These are companies who, on average, move single digits through their earnings announcements. We're talking 3, 4, 5, 6%, usually all the way up to 8%. I try to avoid the 9%ers. That announce on average, they're moving around there. But our numbers are not calculated by us necessarily. I mean, we take the data the option market is feeding us. We're taking the data that the stocks are displaying as they move through earnings, and we're taking all that data to compile these lists, okay? So let's get over to the charts and let's start talking about some of these companies individually, okay? We're going to begin on the quiet side of the deck. Now, let me give you an example of a quiet stock. This is just an example. This is McDonald's. It does not have earnings this week. They declare in early August, okay? But I like to show this as an example. I have the earnings events highlighted with the ellipse. And this is a quiet stock. McDonald's usually moves around 4 to 5%. That's not 45%. That's 4 or 5%. Moves somewhere around there between each and every earnings announcement. And for these stocks on our quiet list, we like to do a strategy called an iron condor. Okay. Now, if you are not familiar with that strategy, it's essentially a short call spread on top and a short put spread on bottom. You combine those together, you get a nice credit, and we want the stock to stay in between. Then we have the break evens. Okay. We have a break even on top. We have a break even on bottom. We just want the stock to stay in between those two break evens. So jumping over to our list this week, really we kick off today. Everybody loves pizza. So, we're talking Domino's here for a minute. You have used to be Bank of the Ozarks, but it's now BOK. Steel Dynamics declare today. Then you get into some really well-known companies, 3M, DR Horton, Charles Schwab, Tesla, Philip Morris, Alphabet, okay, Google, okay. And then Blackstone, Intel, and American Express. It's quite the list this week. And again, this is not all inclusive. This is just where we are targeted based upon how the options are being priced out right now. So let's start. Let's start with Domino's Pizza. Okay. Now, Domino's Pizza already had earnings. So they kicked us off this morning and they had good numbers. Okay. The stock initially moved up nicely on earnings, but then has sold off a little bit, currently trading higher by 1.38%. All right. Now, the average expected move for Domino's is around 5%. Okay. So this stock stayed well within those tolerances. And an Iron Condor, was a nice play for Domino's Pizza. Okay. Because now that the stock has made its move, implied volatility on the options has dropped. We call that IB crush. And that cheapens the options so that we can buy them back cheaper than what we sold them at. And that therefore we capture that profit. Okay. We capture that, that difference. So sell high, buy them back low. We keep that profit. All right. Now, moving on to Steel Dynamics. Okay. They have earnings after market close today. The average move here is only 5%, but let me tell you something about Steel Dynamics. All right. They do not have weekly options. So really, you got to go out to August expiration, the third week in August, if you wanted to do an Iron Condor to capture that premium crush. The problem with that is you can see that this stock is a bit of a mover. Okay. Look at this. This stock has gone from a recent high of around 288 to a low of 216. Okay. So 288 to 216 in less than a month. That's quite the move. And the thing about an Iron Condor is you want the stock to stay in between your break evens for the duration of your trade. And while there might be a little profit that we make on the IB crush, just because there's so much time in the options, they're going to keep those prices somewhat elevated because of the historical statistical movement of the stock. Okay. So that's an example of one I would probably avoid, even though it's right in my wheelhouse for the price, right? Trading right around $230 or so. Its average move is about 5%. It just doesn't move very much through the earnings announcement, but the problem is it moves quite a bit after. All right. So let's move on. We got a lot to talk about here. Starting tomorrow on Tuesday, July 21st, before market open. So first thing in the morning, we have 3M. 3M will announce our earnings results, and their expected move is about 6%. And that also is about average. Okay. So, priced at $160. This is right in our wheelhouse. For these Iron Condors, I usually like things that are priced between $75 and $1,000. So $75 up all the way up to about $1,000, and depending on the stock, maybe even a little, maybe even a little higher. But it really depends on the stock. Okay, so 3M. Quiet mover, only about 6%. So then we get into the home builders. Now here's DR Horton. They're selling off a little bit heading into the earnings announcement. They're down 3% today. So this would be kind of a timing thing where, they have earnings tomorrow morning. That's Tuesday, July 21st, before market open. The average move here is about 6%. So you would, do your trade today, try to get that off. But, a little concern about how this stock is moving. As you can see, it's, I like to see my scale over here on the right. See, it's in $5 increments. That's kind of the default of how it popped up. Okay. And I see that this stock can move $30, $20 in a month. Okay. It can move very fast for a home builder. Okay. So I would be very careful, but it is in our wheelhouse for an Iron Condor, but I would be very careful with it. Okay. So continuing to move on through our list. Now, Charles Schwab, they will announce tomorrow morning before market open. And here's one that the financials, I always really do like to trade. Okay. If they qualify price wise, you see this is $100 stock. So it's in our wheelhouse for that iron condor. They will announce tomorrow morning, and they have an average move of 5%. And usually that's pretty consistent. Okay. Through each earnings announcement. And, the great thing about these big financial institutions are they're so big they just don't move very much. Okay, so we'll watch for Charles Schwab announcing tomorrow morning. Then we really start getting into the meat of the week here. We have Philip Morris. They will announce earnings on Wednesday, July 22nd, before market open, and the average move here is 4%. So currently trading at $192. This stock is ideal for an iron condor strategy if the option pricing all kind of lines up the way we like it, the way we need it. All right, too. This would be a good trade. Really, I like. I'm going to really look hard at Philip Morris and for a Wednesday morning trade, and expect good things from that. All right. Now moving on to, again, one of the name brand companies for the week, because everybody likes to really harp on Elon. You're either a big fan or you're a big hater, one of the two. Okay, they will declare Wednesday, July 22nd, after market close. Again, this is not SpaceX. SpaceX, they're estimating that sometime later in the cycle here, as far as announcing earnings results. But Tesla, they will declare Wednesday, July 22nd, after market close. And the average move here is about 6%. So the stock is selling off today a little bit, down about 2% in midday trading here. And an iron condor would be ideal for Tesla because it usually is pretty quiet through the earnings announcements. Okay. And I don't really expect, there's not much news on either company right now. Everything's pretty quiet. So I think it might be a good candidate for this week. Moving on, we have Alphabet. Okay. Alphabet will announce Wednesday, July 22nd, after market close. And believe it or not, this stock, this only moves about 5% through earnings. Now you see that big gap back there. Okay. That gap was an anomaly. The stock back here moved higher by about 10%, just under that, 9.96%. Okay. But normally, Google is a pretty quiet mover. Okay. And you can see here, a gap down on the open, rallied higher, closed down by maybe a percentage point. Okay. It's previous. This is about a 2% move, maybe even less here. So it's usually pretty quiet. And I think we got the big news out of the way, but I would be a little weary of that. I would definitely want to get my break evens a good 10% out of the money if I can get value there. Can you trade, put your break evens by selling options that are 10% out of the money? Absolutely, you can. Again, with an iron condor, which is a hedged strategy, we don't sell naked options. Okay. Can you do that? Yes, you can. But how much premium do you take in? And that is the number that I am most concerned about when I go that far out of the money. Got to be worth the effort, so to speak. Don't want to be picking up nickels all the time when I can be picking up quarters somewhere else, type of thing, right? Okay. So moving on through the week, we have Blackstone. They will announce Thursday, July 23rd, before market open. Big financial company, okay? Not BlackRock. This is Blackstone. Okay, Thursday, July 23rd. The average move here is about 6%. And you can see here, got a couple of earnings announcements in here, and that definitely plays into there. Again, we're not looking at the whole trend here. We're just looking at the earnings announcement and maybe a day or two after. That's it. Okay. On this last gap down here, look what happened after the earnings announcement. It just traded sideways for 5 days and then popped right back up to almost where it was. Okay. So, great stock for an iron condor strategy, trading above $100 here at around 124. Okay. Definitely on our list. Also on our quiet list this week is Intel. Intel will announce Thursday, July 23rd, after market close for Intel. Now, the average move here is about 6%. Okay. Now, in the past, we have had some movement on Intel. Okay. The stock really caught fire after, President Trump made an investment some time ago. This last move that you see here, this popped up about 23%. Okay, so that was a little bit unusual because every other earnings announcement you can see are much quieter. Okay, going back, here's October of last year, and just really not much movement. A little gap down here, but again, not much movement on a relative basis. So I would be a little weary of Intel right now. Again, a 6% move. I'm thinking they're going to be pricing this up for 7 or 8% by the time we get to that Thursday date, meaning they're expecting a 7 to 8% move. And I wouldn't be surprised if this thing moves double digits. Would not be surprised if this moves double digits again. Okay, so just be very careful with Intel. And actually, if I can get a Straddle or Strangle cheap enough, even though this is on our quiet list, again, we're taking the historical average. Okay, we're taking the historical average move here, 6%. So if market makers all of a sudden price in a 10% move, that would be very concerning. Okay. And so you got to check the estimated moves by what the market makers are pricing in. They are extraordinarily good at usually hitting the number, but every now and then there is an edge built in, and we can, we get the benefit of that. Okay. Now, ending up on our quiet list, last one here for right now, we have American Express, and again another financial that is right on my list here. They will announce on Friday, July 24th, before market open. So everything Friday. There's quite a few companies announcing earnings on Friday. They're all in the morning. Average move here is just 4%. And again, I see that the stock has gone from a low of about $300 to $350 in about 5 weeks. I'm not concerned with that overall move. I'm just concerned with the move in and around the earnings dates. Okay, in and around the earnings dates, because with these we're usually in. Doesn't matter if it's a Straddle or Strangle on a breakout stock or an iron condor on these quiet stocks. We're only in these things for a few days. Okay. All right. So we're going to jump over to the breakout list for a moment, because that is where a lot of people love looking at these breakout stocks. Okay. So what is a breakout stock? Well, these again are companies that move double digits. A good example of that is Akamai. Now, Akamai does not have earnings this week. They don't declare until early August. All right. But I wanted to show you the chart of how this thing has moved in the past. So I have the ellipse around the past earnings announcements. And you can see how drastically different these are from the McDonald's ones. Akamai is a notorious double-digit mover around each and every earnings announcement. Okay. Sometimes moving as much as 20% or more around earnings, but a consistently double-digit mover. Okay. Usually the average expected move, I believe, is around 14%. Okay. For Akamai. So it is a mover. And that's where these stocks come into play. All right. So let's take a quick look at the list, and then we'll dive right into it. All right. You see there's only 3 candidates this week. All right. Really 3 ideal candidates as of the time that we're doing this recording. We have ServiceNow, RingCentral, and Deckers. So let's take a look at the charts and begin to dissect these a little bit. So ServiceNow will announce earnings results on Wednesday, July 22nd, after market close. So Wednesday evening. The average expected move here is about 12%. So you could see that even in between earnings announcements, this thing flies around. Okay. So here's the last earnings announcement back here. You see the big gap down. You see this previous earnings announcement, the gap down, and then some follow through to the downside. All right. This thing is a mover in and around earnings announcements. So option prices will probably be bid up here at $100. I would not be surprised. Now, I didn't look at it. Well, in fact, I'm just curious, so I'm going to pull it up here. If my data comes in here pretty quick, and just see, you want to give yourself a little bit of time. And at $100, where we at 104. So at 104, you're looking at around 15, around 14, $15, which is $1,500 for a straddle. Okay, around $1,500 for a straddle. That is a little bit more than I'd be like to pay. Okay, I'd like to get it closer to about 10% of the stock price, so meaning $10 instead of $15. But if you give yourself enough time, this could definitely pay off, and this is definitely on our list. Okay, for a potential breakout stock that we would, if we didn't get the move that is initially profitable on the trade. Again, we're trading a straddle or strangle on this. Definitely one that I wouldn't mind holding because it can move. It really does move in and around the earnings announcements. Moving on through our list, we have RingCentral. And anytime we get a stock that's around $40, while I don't like $40 stocks for iron condors, I do like them for straddles and strangles. RingCentral will announce earnings results on Thursday, July 23rd, after market close. And the average move here is 12%. Now, the last earnings announcement, you can see it didn't really move very much after the earnings initially, but then look at the sell-off. A nice little sell-off following that earnings announcement, okay? And then you get gaps where the stock was trading. Here it closed at $29.39. The next day, it closed at $39.50. $29.39 to $39. That's a $10 move on a literally $30 stock. Okay, that's a big move. So RingCentral also on our list for consideration this week. If we can get the right options with the right expiration dates and the right pricing, okay. And closing out that volatility list, we have Deckers. Now, Deckers is a notorious mover around earnings. They will announce Thursday, July 23rd, after market close. The average move here is 12%. Same kind of thing here. I don't want to be paying $12, $13, $14, $15 for a straddle or strangle. I'd like to be below $1,000 for a $100 stock. Okay. But you can see that even in between earnings, it has brief periods of a consolidation and then it'll start moving around big time. You see how volatile this thing is around, even in between earnings. At least it has been for this past, since the beginning of this year, the beginning of this year, 2026. Okay, you see the gap higher here, then a little bit of consolidation, and then sell off, going from 120 all the way down to 95, and then back up to 112 or so, and then back down to 95, and then back up to 115. Okay, great stock for a straddle or strangle if you want to do it. Give it a little bit of time. Okay. Now I've got some honorable mentions, and I include honorable mentions that maybe the pricing wasn't there or there's something else going on with the stock. So I do want to mention a few other stocks going that announced this week. Okay. Beginning with General Motors. And this is obvious because it's one of the world's largest car companies. Okay. Car manufacturing companies. General Motors will declare Tuesday, July 21st before market open. And this is typically a quiet mover, around 6%. Now, notice this is right on the lower end of my criteria for an iron condor, around $75. This does not mean we can't find a good trade on it. It just wasn't really there coming out of the weekend. Implied volatility might get jacked up on this, and it might get very nice before meaning today, because it announces tomorrow morning. But coming into Monday morning, this was not really priced right there. Okay. Another stock I wanted to show you was GE Vernova. Now, I include this because this stock was on an incredible run. I mean, to tell you, this stock, look at the trend here on this stock, GE Vernova. I mean, just rallied up big. They will announce Wednesday, July 22nd before market open. The average move here is 14%. Now, when you got $1,000 stock and you want to do a straddle or strangle, you're going to be paying big bucks. So this is not a trade for small accounts. Okay, I can tell you that right now. In fact, let's just look at maybe where some pricing is on this, and give us a little bit of time to be right. And at 1,080, all right, you're looking at 63 plus 62. You're looking at, again, that's $6,310 for just a call. Okay, and then $6,290 on the ask for a put. So you're looking at $12,000 for a straddle or strangle here. Okay. Maybe a little cheaper for a strangle, but not, again, it doesn't make it potentially more profitable. So again, only for bigger bucks on GE Vernova, but it is one to note. Okay. It is one to note. AT&T, this is now a $20 stock. Man, they've really gotten beaten up. They will announce Wednesday, July 22nd before market open. Nothing really here because they are a single digit mover. It's a $20 stock. More notable since they are a big communications company. IBM, I did want to mention because IBM pre-announced last week. Okay. They did they knew things were going to be so bad that they had to pre-announce. So on some brokers platforms, you're going to see that the earnings were 14th of July. That is not the date. That is the pre-earnings date. Okay. And you can see the stock dropped over 20%, the worst single day move ever for IBM on a pre-announcement. I would expect at $215 that this week on Wednesday, July 22nd, IBM will announce after market close. That's when they'll do their conference call. The average move here is 6%, and it is really a coin flip. Did the move already happen? Meaning an iron condor would be probably a good play. I bet implied volatility is going to be really jacked, meaning inflated on this around earnings, but I would be extremely careful with IBM, but a good one to watch. Definitely want to watch the fireworks on Wednesday for IBM. I mean, this move right here for this particular stock, unbelievable on a pre-announcement. And then I did want to address two transportation companies, okay? So two of the big train operators announced this week. We'll start with CSX, okay? You just realize sometimes you kind of forget what moves on a train. And we're talking about everything from cattle and commodities to automobiles to parts to supplies to grain to, I mean, just everything in bulk. More efficient than trucking. Now you do need trucking because you got to get to more detailed places that maybe a train track hasn't been laid, right? But you can see, look at the overall trend of CSX. I mean, they have been on a run. Okay, they will announce Wednesday, July 22nd after market close. The average move here is about 4%. All right, finally, we're going to wrap up our list this week with Union Pacific. Same scenario here. They will announce on Thursday, July 23rd before market open. The average move here is 4%. And I can tell you Union Pacific is definitely on my radar. Okay, so it wraps it up for our list this week. But hang on, we still got some trades to talk about. All right, so we can show our list one more time. This is where our eyes are really zeroed in on these stocks for this week. Again, I'm really liking American Express on Friday and liking a few others of these Blackstone or on Thursday. Okay, but and definitely some of the breakout stocks. So a good list this week. It gets even better starting next week. But before we get there, let's talk about some trades. Now, I'm going to show you some the good that can happen and the bad that can happen. Okay, because we have two trades to go over. One's good, one's bad. Let's start with the bad. Okay, we did a strangle on Levi Strauss. All right, 2 weeks ago. We held this as an open trade. So last week we talked about this being an open position. We're going to hang on to it. you really need to look closely at the chart and look at the volatility in the stock after the earnings announcement, which is detailed there. And you can see the big wicks on the candles. And this is the buyers and sellers really going to battle, trying to establish price. And unfortunately, it turned out to be very bad luck for us because it would look like it was going way down midway through the day, and then it would rally up at the end. Or it would start off on a bullish move, and then it just couldn't catch a bid or sell off on an offer. Okay, that's all we needed it to do was trend a little bit, and it didn't do it. So we ended up with a loss. You can see our loss there at $345. Okay, so not bad. We don't like to lose a lot. All right, could have lost a little bit less if I traded out of this earlier, but I do like to sit on these sometimes and look for follow through, and it pays off a good percentage, enough percentages of the time to wait than it does causing a situation like this. Okay, so a loser nonetheless. We don't like these, but the good news is the trade that we offered last week, that was on Morgan Stanley. So let me show you the setup on Morgan Stanley. This thing was right in the middle of, there's your Iron Condor on the right. Okay, this is an option modeling software that through Hub. All right, so we modeled the trade out. We see the break evens, the horizontal blue line on the top, the horizontal blue line down below price there. And we just needed it to stay in between those two break evens to profit on the trade. So we took in a net credit of $150. That's the maximum we can make on the trade. And how did we do? Well, it did exactly what we wanted it to do. There was a little bit of volatility, but nowhere near testing either our upper break even or our lower break even. It stayed right in the middle. Exactly what we wanted. This is what I love about Iron Condors. Guess what? When you're right, like we were on Morgan Stanley, you don't have to do anything. You can just let the trade expire worthless. Why would you let a trade expire worthless if there's still value there? Well, because you sold it. You sold the premium. You want to keep all that premium. So you don't want to spend any money to reduce the premium you took in. So you just let it expire worthless. We made $150, which is 1.5% return on portfolio. Okay. In just literally 5 days is what we did there on Morgan Stanley. All right. So great trade. And we're going to look to reignite the trend of winners this week with a new opportunity. So through all those trades, what did I look at for this week? Well, really what I thought was offering some good value was on the trade of the week, which is Tesla. Okay. Now the alert has gone out to our subscribers of our earnings club. If you're not familiar with our earnings club is, these trades that you see each and every week, I send out to our subscribers through earnings club. We offer it at a incredible rate. You're not going to believe how inexpensive this is. Okay. That we offer this, and there's a reason. Okay. Because as you know, we've been very successful here on this show with our trades overall. We have a really good track record with trades, but we're looking at Tesla. This is an Iron Condor. Okay. This trade has already gone out to our subscribers for our earnings club. And if you'd like more information on that, there'll be a link at the bottom of this video and you can explore opportunities there. So that is our trade of the week. That is our list for the week. A lot going on. And guess what? The numbers are just going to increase on the number of earnings. So we got a lot to work through. More big names coming up for the next 5 weeks, maybe 6 weeks or so. So you're going to want to tune in each and every week right here for our earnings call and join us on Monday next week. All right. So everyone have a great trading week, and we will recap Tesla next week, and I'll get you a new trade as well. So everyone have a great trading week, and I'll talk to you again soon. Take care.